Welcome back to the channel. All right, we are gonna do a video today. Well, I know it's been a little while since I've done one. I've been traveling, I haven't had time, so here's the deal, all right? Today we are gonna go over a few of what I think are the most important things to know going into this weekend. I'm gonna go over a couple of things you've probably already heard about, one of them being the Wyckoff Distribution. A lot of people have been talking about that and how this whole thing was engineered. Well, we're gonna go over it and we're gonna look at what the charts are telling us in comparison to the Wyckoff Distribution method, and we're gonna see what that may mean. Because honestly, even though it's played out to a certain degree, it doesn't mean it will continue to, or it might. So we're gonna figure that out. Make sure you like the video, make sure you subscribe, and let's get started. All right, so first thing I wanna show you is this symmetrical triangle that we've put in here. All right, now this symmetrical triangle I've been following since, I don't know, we were about I think we were about right here. We hadn't gone above it yet. And at the time, what I was hoping for was strong support above the symmetrical triangle, followed by a bounce. That did not happen. In fact, this area here of this symmetrical triangle actually turned into a head and shoulders. So what you ended up having here was, you know, the typical left shoulder, head, right shoulder, neckline, followed by a drop that matched the neckline. So it was a very typical head and shoulders pattern that came up on most charts, and it predicted the drop going right back to the base of this symmetrical triangle. And you know, this has really shown us good support and resistance levels for now. In blue, you see here what I put down as a prediction yesterday. I was thinking that what may happen is we might have a drop to the base of this and then bounce around in between it before we break out. Now, that's my prediction because of a number of factors that I'm going to go over. But one thing that you need to know about symmetrical triangles is that they are also referred to as continuation patterns. All right, the continuation patterns, like these symmetrical triangles, they normally continue the current trend. Now, what that means is the current trend is a bearish trend. So you're normally going to see a continuation pattern like a symmetrical triangle come in and consolidate and result in a bearish drop. And that drop would be the length of the triangle. Now, in this case, you can adjust the length of the triangle, but I tried to go as liberal with the length as possible to get the maximum effect of where this might be. And I didn't put this in my Twitter because you have to wait until the triangle is kind of validated. And at this point, this triangle is somewhat validated. So assuming that this goes to the downside, if we have a breakdown, we're looking at somewhere around 23K, which puts us right between 25 and 20, anywhere from 23 to 26, honestly, because I think if a drop like this happens, what would likely happen is that you would end up having a lot of buying pushing the price right back up. So it would probably look very similar to this. It would be like a wick coming down and a lot of buying. Now, there's also the possibility that it doesn't play out like this. I mean, symmetrical triangles and continuation patterns are kind of aimless. They don't give you a real good indication of what's going to happen. It's just that in more cases than not, it follows the trend. But we have two different trends here. The macro trend is this. This is the macro trend, right? The trend right now within the triangle is this. You know, so the question is, are we going to follow the more macro trend or are we going to follow the micro trend? Usually with a continuation pattern, you're going to continue the macro trend. So if you have a continuation pattern like this, turning into like a kind of a flagpole setup on the way up, then that's usually a bullish sign that you're going to break out of it. So if you end up having a consolidation like this without a massive breakout and you're getting to the peak of this triangle, it's basically telling you that volume is drying up and not enough people are buying, not enough people are selling. So the price is staying very stable. You have any dip or you have any increase in buying or selling, and you tend to move in that direction. So in this case, we had an increase of buying. In this case, we had an increase of selling. So we really have to see what's going to happen here. It's going to be quite interesting because I could potentially theorize that this drops down to the 28, maybe even 25 level, and then wicks up immediately, and we see it break right out of this, and it would be like the last fake out. Now, that's a possibility. Granted, my prediction was that it was going to break out. Now, why did I come up with that prediction? I had a reason that I came up with this prediction, all right? So the reason I came up with this is because of what I was seeing on Glassnode. So this is really important, all right? The first thing I'm going to show you on Glassnode, hang on, let me switch this chart over to the full screen so you can see it a little bit better. And what we will do on the full screen is we're going to move me, hang on, we're going to move me to the left-hand side. There we go. So now you can see the chart just a bit better, okay? So basically, hang on, let me make sure that I'm editing the right scene. Okay, sweet. So it goes back correctly. We will even make me a little smaller. There we go. All right, so now if you look at the Glassnode chart, why would I think if a continuation pattern is normally bearish, why would I think that this might be bullish? Right? There's a reason for that, so we go to Glassnode. Now in Glassnode, there's a couple of things that I like to look at. The first is the exchange inflow volume. Now, bear in mind, I have the advanced subscription on this, so that gives me 24-hour resolution. I'm not seeing everything at the 10-minute level. If my YouTube channel ever gets up to 10,000 subs, I'm going to upgrade to professional. It gives me a goal, you know, but anyways, for right now, this is sufficient. And what we're really seeing, look at what's happened since the crash, all right? So this is when the price really dipped down, all right? We hit like 37K here. The price was really dropping. It hit 34K just a couple of days ago. So during this entire time period, the inflow, this is the inflow of Bitcoin to exchanges. We saw a massive spike, and then followed by that spike, we saw a huge drop in price. The gray line behind is the drop in price. But now we're seemingly looking like we're gonna go into a bearish continuation pattern, but there's no Bitcoin going onto exchanges. It doesn't make sense, right? Why would you not have a spike here if everyone is anticipating a dump out of this symmetrical triangle, right? It doesn't add up. What I would expect to see on this chart is another spike of inflow, have Bitcoin going onto exchanges to be sold. If the amount of Bitcoin on exchanges is going down, then it's highly unlikely that the price is going to have a massive drop, because what's probably going to happen if there is a bearish drop out of here, it'll be a drop at very low volume, right? Low volume will move the price. And if low volume moves the price, then that means low volume can buy up the price. And usually when the price goes down like that, and there's less circulating supply on the exchanges, what ends up happening is that you see like a big drop, and then everyone's rushing to buy because that's what everyone's waiting for. They're waiting for a bigger discount. And then you see the price shoot up because the volume suddenly comes in, everyone trying to buy their cheap Bitcoin. I have a feeling something like that's going to happen. So we're starting to see here that the inflow of Bitcoin to exchanges going down. What else are we seeing? This is the exchange outflow. This is Bitcoin leaving exchanges. Ironically, this spiked also during the crash. So we basically saw that like these were broken up by hours basically. So you pretty much, when this crash happened, you saw a huge inflow of Bitcoin going to exchanges. You saw the price crash, and then you saw a big outflow of Bitcoin leaving exchanges. You also saw accumulation addresses adding a lot more Bitcoin to their address. So meaning that people who have been holding Bitcoin for a long time bought a lot during that dip. And now we're seeing, after these spikes of Bitcoin leaving exchanges, it's also dropping. So we're not seeing a ton of Bitcoin leaving. We're not seeing a ton of Bitcoin going on. So the supply is staying the same, volume is staying very steady, and low volume is moving the price pretty big. That's what seems to be happening, meaning that a big drop can, be bought up very fast, and a big pump can also be brought down very fast. So we have to look at what we think is more feasible here. And I tend to think that if Bitcoin becomes cheaper, it's a lot more feasible that people are going to buy it. Okay, so let's look at a couple of other things, right? If we're going to look at addresses with a non-zero balance, while the price has been low for the last couple of days, you see this has started curving back up. So people that did not hold Bitcoin or had a zero balance on their Bitcoin address have been buying Bitcoin. Then we look at addresses with a balance of greater than or equal to 0.01 Bitcoin. Also, trending up for the last few days. A little bit of a dip today, but overall the uptrend has begun. We go to 0.1 Bitcoin. So this is this is greater than or equal to 0.1 Bitcoin. This has been steadily trending up for the last 3 days. So people that hold at least 0.1 Bitcoin have been buying. People that didn't hold Bitcoin have been buying. Now, if we look at addresses with greater than or equal to 1 Bitcoin, what do you know? It's also trending up. We look at addresses with greater than or equal to 10 Bitcoin, trending up. So this is a pattern that we're seeing. A lot of people are accumulating at these prices. It's unlikely that a lot of these people are just going to sell. I mean, look at the amount of whales. These are people with greater than or equal to 10,000, all right? 10,000. That's been trending up. I mean, not by a lot. Look at the scale. We're talking about, there were 87 people. Now there's 89 people. But then again, 10,000 Bitcoin is a lot. So this is showing me a couple of things. The fact that there's no big spike of inflow is telling me that the supply just doesn't exist for a huge dump, right? And if it does dump, it's going to be on low volume. It's going to get bought up. That's why I think that we're not going to, even if we do break down out of this, it's going to get bought up fast. And it's much more likely that a lot of people are going to be expecting it to drop, and maybe it will very slightly, but then it'll quickly reverse and go up, which is why I have this type of pattern here. It's just a general pattern. It doesn't need to follow it exactly, but the goal was we hit the bottom of the triangle, we consolidate a bit more, possibly dip below, and then we move up. That's why I predicted this. Now we're going to move on to something else. I want to show you one other thing, all right? This is what a lot of people have been talking about. So we might as well discuss it because it has been the talk of like crypto Twitter. I'm going to get rid of all this stuff so you can see the chart a bit better. We'll get rid of the moving averages. Okay, so you look at the chart here. Now we're going to look at the pattern for what's called the Wyckoff distribution. I'm going to switch back to the regular screen. Okay, so this is what the pattern looks like right now, all right? This here is the Wyckoff distribution. All right, let's go back to that full screen view. So this, I want to explain the chart to you a little bit because when you compare them, you can see the similarities, right? You have this left side here, you have the left side here. Hey, thanks for following, man. I appreciate it, Micah. All right, so we look at this, and what I really take away from this is that we have kind of followed this to some degree, but we have to keep in mind, what is this telling us? It's basically, the Wyckoff distribution is pretty much a distribution that this guy who created it, I don't remember his actual name, Richard Wyckoff, he noted that these type of patterns are very common and reappear in major market cycles. Now, if this is what's happening, we first had an accumulation phase. That's when people start, accumulating, they're buying. And then you have a markup phase. A lot of people have bought, the price gets marked up. And during that markup, you get reaccumulation. So if we look at this, we basically see an accumulation phase down here. We see a markup phase, we see a reaccumulation, and we continue the price moving up. It kind of matches this entire left side. Then you have a distribution phase, which is kind of like a flat top with a lot of up and down peaks. That's what this looks like, right? This is that phase that's called distribution. So in distribution, you're basically distributing at high prices between new buyers and sellers. And this is when you tend to get a lot of new people in the market and you get a lot of old people taking profits. So there were people who bought Bitcoin early that sold here, and new people that are FOMOing and want to get in on Bitcoin. They didn't buy when it was low. They're getting in here because they think it's going to keep going up. Then you have this phase where it drops. All right, the drop is the redistribution. Now you're basically getting a lot of people in fear, and the price is getting marked down. People are selling. You have people who bought up here selling at a loss. You have a lot of people that bought here that are selling to break even before they're at a loss. And then you have a lot of people that bought way down here that are reaccumulating, that are buying more, because they're getting a discount. So what this would assume, if this is the chart, is that we are still in that markdown phase. And this basically just loops, right? So this, from here, you go back into accumulation, and then you have another markup and a distribution. Now, if this is what's happening, a lot of people think that the markdown phase isn't done. But look at these patterns. All right, the first thing that you see in this redistribution phase, it's a very simple thing because we saw everything match up perfectly on the left-hand side. On the right-hand side during redistribution, what you should see is a somewhat flat redistribution. Look at the reaccumulation, okay? If we look at the reaccumulation here, the reaccumulation was somewhat flat, right? We have a line here, we have a line here, right? It basically moved up and down until it broke out. Now, if we look at where we are now, this reaccumulation looks very similar. It is also somewhat flat, right? Or is it? You put in the lines, and what do you see? What I actually see is this is not as flat as it looks because we are technically trending up here. That's the difference. The big difference is that the price has gone down, but it's set in lower highs the entire time. Look back at the chart again. There aren't lower highs here necessarily. These are more flat tops, flat bottoms. Maybe a slightly higher low in the second phase, but we've already had that. A slightly higher low, but we're still going. this to me looks more like a longer continuation pattern. Now, there's no guarantee that these are always going to match up perfectly. So could we have another drop here and just move right back into accumulation and then mark up again? We absolutely could. But I would say that expecting the price from here to drop all the way down to 20K and start trading there, it's a little bit of a fool's errand if you also take into account that not a lot of Bitcoin's going on to exchanges, right? So what's the market sentiment? I think the market sentiment right now is that people are scared and they're waiting to buy at a bigger discount. That's what it seems like to me. And usually when that happens, you tend to have a point when people realize that it's not going to go down anymore. And sometimes it has to take a final drop for that to happen. But that drop in this scenario could even be 32K. Like it could go to 32 again and then just start breaking out, right? We don't necessarily need it to go all the way down. But 25, 26, not out of the question. And these are the reasons. The only thing that's not on the side of the bears right now is the fact that volume and on-chain analysis doesn't match up. You know, then you also look at the NVT. The NVT is basically telling you, this NVT ratio is pretty much telling you the value of the network as decided by the participants. Okay, so if we look at this NVT ratio, pretty much what we're seeing, I didn't mean to do that. Okay, hang on, let me fix that. Let's go back 2 months, March to May. All right, so basically what you're seeing on this NVT ratio is you're pretty much seeing the network value to transactions. This means that what is, based on the amount of transactions being done, what is the estimated value of the network? And right now, that NVT ratio is really low. The NVT ratio being so low is essentially telling us that we are pretty much undervaluing the market, because once the price moves up, this is going to spike. And right now, with this being at such low levels, I mean, let's go back a little bit more so you know exactly what I mean. We'll go back a year, okay? So if you look at this, the value of the network right now is marked at roughly the same place that it was marked during the crash of March last year. And the price of Bitcoin was around 7K. So this NVT ratio is telling us that the value of the Bitcoin network is also a lot higher right now, but it's completely undervalued because of this drop. That indicates a lot of bearish sentiment and fear. And you can kind of see that in the way this is going. Heck, if we change this to a 7-day exponential moving average, look at what happens. You're seeing it's actually, when you look at it in the form of a moving average, it's actually valued even lower than it was during the March drop, which means that this is quite possibly the best time to buy that we've had in a long time. And, you know, I think it's something that a lot of people are missing because the fear gets them to miss that. So these charts are very helpful if you have a method of how you can interpret them with what you're seeing on the actual price charts. Okay, so that's pretty much what I've been looking at with Wyckoff. I mean, I think that Wyckoff has its merits as far as what's been happening, but I also think that, you know, to think that this is going to go all the way back down to like 10, 11K, like some people are saying, is a little misguided, because you would want to see a lot more people not accumulating, right? People are accumulating right now. It's unlikely that people are going to accumulate when prices are going to go down, because usually the people that are going to sell and the price is going to drop significantly are the people with large holdings, and those are the people accumulating. So it just doesn't match up that this is going to take a massive drop and go right into a bear market with, you know, and I see a lot of people on Twitter saying that. I don't agree with it. Maybe they're right, who knows, but it just doesn't add up with the on-chain metrics. Okay. So that's one thing. Now, the next thing I want to show you is what's happening with all the charts. All right. There's a reason that even on my Twitter, I've been so focused on Bitcoin. You haven't seen me post a lot of stuff on Twitter for Ethereum charts or EGLD charts or ADA or even Polkadot, you know, whatever else. There's a reason. All right. I'm going to show you all the charts. I want you to take a look. Okay. This right here first is the Bitcoin chart. Okay. So take a good look at it. That's a Bitcoin chart. Let's go back to the other view so you can see it better. So that's the Bitcoin chart. All right, we're going to look at 4-hour charts for everything. Now I'm going to switch over to, hang on, let me move Glassnode out of the way. Okay, so that's a Bitcoin chart. I'm going to switch over to Ethereum. Okay, notice a similarity. Okay, see what happens when I switch between those? Now I'm going to go to EGLD. Okay, that's Ethereum, that's EGLD. Okay, we'll try to put them in the same place. That's Cardano. Okay, let's look at them one at a time again. Bitcoin, Ethereum, EGLD, Cardano. You see what I'm trying to tell you? Basically, all the charts right now are following Bitcoin. All the major ones, at least, that we look at on this channel. You know, if you look at Matic looks a little bit different. And that's because Matic had a massive run up. It was way oversold at this time because Matic is exploding pretty quick right now as layer 2 to Ethereum. And that's pretty important because it's actually making Ethereum usable. So Matic having a huge increase here was expected. I actually picked some Matic up. Actually, I didn't get it at around 80. I think I picked up my Matic at around $1.20 to $1.40. Like once I knew this downtrend was over. I should have bought some at like 80 cents, but whatever. Anyways, Matic, and I bought Matic way earlier too, but not a lot. I just owned a little bit. So anyways, Matic is one of the ones that's kind of deviated, but everything else, all these other coins, they are following so closely to Bitcoin for a reason. It's because Bitcoin is being looked at as the main, like, North Star or whatever for market sentiment and for where liquidity is going. If liquidity is leaving Bitcoin, it's going to leave the rest of the markets. That's just what's happening. And if it leaves Bitcoin, it's probably going to leave the rest of the markets even faster because the altcoin markets, they are just not as big as Bitcoin in market cap. So if you have people selling on altcoins and they have low market caps, it's going to bring the price down very quick because there's not enough liquidity in those in comparison to Bitcoin. So keep that in mind. That's why we're following Bitcoin so closely, because if you're interested in Ethereum, if you're interested in EGLD, if you're interested in Cardano, you need to be looking at the Bitcoin chart. That's what's going to dictate what happens with any of these. Wherever Bitcoin goes in the short term is where all the rest of these are going to go. Ethereum has the most chance to deviate because Ethereum is kind of, you know, getting on its own 2 feet in this past cycle, and we need to see what happens with that. If like another bank comes out and says that, oh, we're issuing bonds on Ethereum, then yeah, Ethereum might move without Bitcoin seeing a lot of movement. So something like that's possible. EGLD also right now is a time to kind of be a little bit cautious because right now with EGLD, we are sitting at this golden pocket level. The one thing that's going to be very important for EGLD in the next couple of days is keeping an eye on growth.elrond.com, going down to exchanges. Here, I'll show it to you. Hang on. Let me go to the full screen. Let's look at growth.elrond.com. So this is going to be really important to look at for the next couple of days. Okay, so if we go here and we go to exchanges, then you want to go to exchange flow and you want to go to month. And then you see all these little dots. If you put your mouse over it, it tells you the inflow and outflow. So you're going to want to look at the What in the world? Only 3 EGLD went onto exchanges yesterday. That's crazy. That's insane. 3 EGLD went on exchanges and the outflow was 45,000. That's crazy. Okay, we'll see if that number updates tomorrow. That seems a little odd. But anyways, keep an eye on this because right now we are reaching that 10-day mark from when the crashes happened. So if people got scared out of their EGLD investments and they wanted to stop staking, that EGLD is going to come back onto the market tomorrow and the day after. So we don't know what kind of impact that's going to have. I mean, it would be, in my opinion, it would be stupid to do that because EGLD has so much more potential than all these other DeFi projects out there. But there might be chances to pick up some cheaper EGLD in the next few days if people that were staking got scared during the drop, stopped staking, and that EGLD is going to hit exchanges in the next few days. It may not happen. It's possible that the majority of the people staking already understand the potential benefits of owning EGLD in the long term, and they may not sell anything. But you got to take these things into consideration, especially if you have a large stake in it, right? The way I do it is I diversify my portfolio. So if EGLD goes down and Ethereum goes down, but Bitcoin's doing well, I'm okay. You know what I mean? Because everything's diversified. And I also, you know, diversify a little bit in stocks, a little bit in real estate. Like I try to put it in everywhere to give myself enough cushion. It's a smart way to do it. When you're all in on something, that makes it much more risky. So I like to mitigate risk management. We've talked about it. So anyways, keep an eye on growth.elrond.com at the exchange flow for the next couple of days. I'll do another release on my Twitter in the next few days with like that 7-day or 14-day update where I aggregate all of this into a spreadsheet that's a little easier to view. So I'll be doing that soon, but keep an eye on this. This is what I'm going to be looking at for the next few days because if EGLD does deviate from Bitcoin, it might be because of that. And it could be a quick move. You know, you could have a bunch of people putting their EGLD onto exchanges and selling. You see the price drop back down to the 70 level, and then just like you saw here, it all got bought up. It would all get bought up again. That's the most likely thing to happen because buying EGLD at $70 is a ridiculous discount. So if anything like that happens again, I would expect not a lot of time to buy it back. But I would also kind of, if you are planning on buying, I would also kind of wait until you can kind of time that bottom, because just in case it does go down further, you might get a better discount, you know? And I would also keep it on the exchange for like 24 hours to see if it goes up real quick, do you want to sell a little bit and then rebuy if it drops a little bit, if more people are putting their EGLD out of staking. Like, you can keep a look at the numbers and figure it out, and you may be able to accumulate additional EGLD by doing that. Once you feel like you've accumulated what you want, then you can do what you want with it. Put it in staking, do whatever, but you know, it might be an opportunity coming up, or it might not, but just keep it in mind. That could happen. All right, so the next thing is Cardano. Once again, if you look at Cardano, it's doing exactly what the rest of the charts are doing, so we don't really need to talk much about this. I mean, there's a lot of good things going on with Cardano. You just watch their news, follow Charles Hoskinson, you'll find out about a lot of it. But chart-wise, it's exactly the same. It's trading in its golden pocket, and it really needs to see some upward movement above $1.85 to break out of this pattern. With let's go back to EGLD for a second. With EGLD, we want to see it pass $1.30. So this level here, they're basically all looking at the same fib level that needs to be broken. We look at Ethereum, pretty much the same. It's looking at this fib level at around 2,700. That's where it's gotten resistance and needs to break above it. Bitcoin, if I put in the fib, it is likely going to look exactly the same. Let's go back to this view, and we will put in this fib, long term. Is that the right fib? So this is the very long-term fib, and that gives us about 42,000 is what we need to break. If we go back to the medium-term fib, which is kind of sits on this golden pocket that we're on right now, then it really tells us that we're looking to break and sustain above 40,000. So that's the first step. Get above 40,000. So you want to move up here, flip this into support. That's what we have not seen yet. We have fallen through it and gotten resistance on it every single time. And I'm going to put back our symmetrical triangle and our drawings and all that stuff, you know, so we can keep an eye on everything. All right, so this is kind of what we want to see. I'll keep that little brush drawing too that I just put in. But that's pretty much everything. I mean, that's kind of where my head's at. So keep your mind open, keep watching what's happening. What's really key right now is how does this triangle play out? Because we've got confirmation that this triangle is at least valid, because we know we flipped it, we hit support on top of it, we fell below it, we hit support right on the base, and I have not changed this triangle at all since I drew it. And when I drew it, the price was right here. So I drew it on the 24th. This is 4 days later, and it's been super accurate. So until it becomes inaccurate, there's no reason not to use it. So we'll keep looking at it, but for now, I would just be a little cautious, come up with your game plan, figure out what you think's going to happen with all the data that I've given you, because your conclusion might be different than mine. There are other YouTubers out there that will give you a lot of other conclusions, right? I have reasoning for mine. You may agree or disagree, but use the information and figure out what it is you think that's going to happen, and plan as safe as you can so you're ready for it. You know, that's the key. My plan here is, even if it drops, I'm probably not buying anymore because I've used up the most of my liquidity, and I'm probably not, I'm definitely not selling. I'm not selling anything I have, but I can't unfortunately buy anymore. I need to rebuild my cash reserves now. So pretty much that's my plan. I'm just going to wait it out until, you know, more paychecks come in and I can put in a little bit more. Hopefully prices are still good at that time. But for now, that's what's going on. That's what I see. Everything else is kind of standard. I mean, if we look at the basic indicators one time before we wrap up for the day, the one thing that I really like on the daily chart is that we're starting to see the MACD potentially come to an end on this bearish behavior. So if we go here, you'll see that this is a larger view of the MACD, and basically what's starting to happen now is it looks like the MACD is finishing up, and at this daily level, once the MACD comes back and closes, we don't see too many indications where these large sell-offs come back, right? Where they turn into a secondary sell-off. It could happen. You could see a few more red candles in here on the MACD, but I think it's more likely that we're going to start flipping bullish. That's just what it looks like to me. I could be wrong, but I mean, you've seen why I think that, and you know, I haven't seen anything yet to show me otherwise. You know, everyone telling you otherwise, they're just speculating. And I'm trying not to speculate without at least some data. So I have some data behind my speculation. Now, tomorrow, if I see a huge spike of Bitcoin going on to exchanges on Glassnode, then, you know, my my theory might change. So we're going to keep an eye on everything. Follow me on Twitter if you don't yet. I will have updates on what I see on Glassnode if anything important shows up. And, if I see anything else. I follow a lot of good people on Twitter that give out a lot of good information. So look at my followers, follow some of the same people. You might find use in it. And I will catch you next time. I think that's about it. Like, subscribe, trade safe. Have a good weekend. Peace.